globalised economy can match. But while growth continues, the drivers of that growth is starting to change.
It's a dramatically changing business landscape, and the huge shift in economic drivers for the economy means it's going to take a new level of innovative development from businesses of all shapes and sizes to continue that growth.
The divergence between the mining and the non-mining states and territories in Australia continues, but now post the mining investment boom, it's the big non-mining state economies of New South Wales and Victoria that are outperforming in our business survey. Also, you've got a consumer that is still being impacted by lower wages growth, but more generally a feeling and an anxiety around their perception of the elevated cost of living. But at the same time, there are two key offsets here. First is low interest rates, and they are certainly acting as a supporter to economic activity, but also the lower currency, which is really acting as a key stabiliser for the more trade-exposed parts of our economy. So on balance, we're growing increasingly more confident that that transition to the greater strength of non-mining activity in Australia is really starting to build momentum, particularly in regards to services. Clearly, our future is heavily hinged upon our ability to generate new ideas, to be creative, to commercialise the ideas we have, and generally to sort of foster a greater culture of innovation. Now we've done a survey recently of 1,700 businesses where we really wanted to understand their perception of innovation in Australia collectively, but also within their own business.
But what exactly does innovation look like for you and your business?
What was particularly encouraging in our survey is there was no shortage of innovative businesses across all segments of the economy, both very large business, but also lots of small businesses. Not just in the more high-tech parts of our economy, things such as telecommunications, but also amongst small business. We found it in those parts of the economy under most competitive threats, so in manufacturing, for example, and retail. The other thing that's really exciting is because we did it as part of our business survey, we were able to objectively corral those people that said they were highly innovative in their opinion and compare them against their actual business conditions and their level of business confidence. And what it looks like is innovation makes really good business sense because typically those businesses were outperforming in their actual business conditions compared to the broader economy. For small business, the responses were much more varied. So for many small business, it was how close they were to their customer. For other small business, it was just their drive and passion within the business. For others, it was a digital platform. And I think the important answer to that is there is not one answer to what innovation looks like, but for small businesses, it's a whole range of things depending on their particular strength. But the customer-centric focus was the one that really started to come to fore. Also understanding Asian markets and opportunities there were important. Things such as opportunities through food safety and security came forward, but a whole range of things. But I think the single greatest thing was an understanding of the customer and their needs going forward.
Now to retail, which is in its own era of hyper-competitiveness. But with competition comes opportunity.
There's some really exciting things happening in retail. I think retail's misunderstood. It's considered to be an industry in Australia which hasn't evolved very much, is not very innovative. We, on the other hand, see lots of opportunities there. If you look, for example, at online, for a long time, traditional retailers really didn't embrace online retail. Now it's become a fundamental part of business as a complement to their business strategy, not just as a threat. One of the most interesting things about online is 75% of online is based with domestic online retailers. 25% is international and offshore. One possibility there is there's a real trust element. People want to deal online, but particularly with domestic-based online retailers.
Isn't that incredible? 75% of online retail sales are in Aussie online stores. Looking further afield, the growing opportunity of Asian trade and export for small business is opening all sorts of doors for us.
The real hope going forward is that the free trade agreements that we've signed with South Korea and Japan and China, and now the Trans-Pacific Partnership, will start to reduce the barriers of a range of things, including services. I think there are certainly going to be opportunities, but I also think that the really strong opportunities will largely lie in the services side of things, which have had historically limited access to some of these markets. it will open up greater opportunities, particularly in areas such as food. I mean, you look at Australia, a incredible opportunity for premium products to be placed into that middle market, that growing Asian market. I think what's exciting about services is they already feature very prominently in our trade, but compared to many other industrialised economies, our trade in services is very narrow. It's largely centred around two segments. One's education-related travel, which is really a grab bag term for every cent a student spends when they're here, from accommodation to transport to food, entertainment, and also tourism. And one of the really important trends that's starting to emerge in tourism is the need for people to experience things when they travel. So not just what they actually see, but as well as that, what they do. And if you look at Chinese arrivals in Australia, for example, which are set to hit 1 million annually fairly soon, 30 to 40% of those people are repeat visitors. And I think finally the last part of tourism that's underrepresented in this country is Indigenous tourism. Some of the research is showing a very large number of American visitors in particular are actively seeking out an Indigenous travel experience.
Now, we get bombarded with numbers about economic performance every day, and it's important to have a good idea of where to go for accurate and relevant information.
So if I was tracking one thing, I would track our business survey, which comes out monthly and is a really terrific pulse check of how the economy is evolving. Our business survey is the best, broadest based business survey in Australia. It's been running for over 25 years. And you can find our business survey on our website, business.nab.com.au, and you can also find on NAB's Australian Business Insights page on LinkedIn.
Okay, so what do you think of that particular video? What are the main learning points of that particular video? Can somebody give me their viewpoints? Anyone? Come, I need something before we start, okay? What are the key learning points, or what are the key viewpoints that you can learn from this particular video that we just watched?
How the digital platform changing the small businesses like that.
Digital platforms change the small businesses. Okay, so how is that relevant to India's SME sector? What do you think is lacking, or what can India learn from some of these things that we just watched? So do you think that India is in the forefront of online business at the moment?
In terms of India, sometimes traditional method is always workable like that.
So it's not maturing yet, but there's a lot of opportunity to incorporate online activities in an SME sector, so to speak, okay? So keeping that in mind, now everything that we do here is based on the actual happenings. Now I want to actually share with you an annual report of a listed company. Let me see.
Good morning, Prof. Sorry to disturb. Are you recording? Are you recording?
Sorry, I forgot to record. Let me do that now. Thank you for reminding me.
Yeah.
Bear with me. Record to the cloud.
Yeah.
Okay, it is now recording. Thank you so much. So today we just watched a small video on SMEs and Australia, how the Australian economy and how the SMEs in Australia are operating at the moment, and some of the key opportunities, threats, and so forth. So again, thank you for your feedback on that. So now I'm going to quickly show you an annual report of, let's see, of a bank in Australia, okay? And I'm just going to look at it from a perspective of going through it and applying what we are learning in this IFRS for SMEs from that perspective, okay? So let me just quickly share this other document. Can you all see that? You can all see that? Okay, good. So this is an annual report of one of the largest banks, but don't worry, this is not an SME, but I think there is some relevance if you look at it on these financial statements. Okay, so I'm just going to go down to the financial statements, which is what we are concerned about. So here you can see the group's financial performance. Then they talk about the income statement, balance sheet, capital resources, which is the capital resources talks about equity. Okay, so let's have a quick look at this. Okay, so here they have a 5-year summary of income statement. So they talk about 2020, 2019, 18, 17. So this is the current year's income statement for Westpac. Okay. Then here they talk about other 5-year summaries. Here they talk about non-financial areas of performance. They talk about our total customers. And then we go further down. And here we have what we call the consolidated income statement. We'll look at that a little bit more today. Okay, but this is in Australian dollars and in US dollars, which they have provided here. This is the income statement. Then they have further down, they have the balance sheet. Again, they have provided it across previous years as well as current.
Can you please magnify a little bit?
Sure. Is that better?
Yeah.
Okay. So let me just quickly go back to the previous one as well. So income statement, you can see them providing across the years, and you can see interest income, interest expense, net interest income, profits before income tax. So this is a very summarized version of the income statement. That's why we call it a consolidated income statement. Then we have later on what we call the balance sheet. So we talked about the balance sheet, or the statement of financial position, as we call it, or balance sheet for short. Okay. So the balance sheet talks about total assets, current and non-current assets, talks about liabilities, and then talks about the total equity and so forth. Okay. Then we have ratio analysis here. And then we have, most importantly, we have the capital basis, which is the statement of change in equities here. They talk about further down, and then we have, just have a quick look here further down. So they go down to each performance, divisional performance. Let me see if I can find the notes to the financial statements very quickly. Swap. So notes to financial statements are over here. So you can see now, if you can download this is the Westpac, that will be good. If not, I'll share it with you side by side, and I'll show you. Actually, I might share the screen with you, so it will be easier for me to do this side by side. Okay. So just hold on until I share the screen properly with you. Bear with me. Right, stop share. And now I'm going to share the screen with you. Okay. Okay, can you see that side by side, both documents? Yes, okay. Now let's go through the statement, the notes to the financial statements. Okay, so this is what we call the notes to the financial statements. So this is the theory, and this is the real application of that theory. Okay, so you can then see how it is actually being implemented in real life. Okay, so here we have the scope of this section. This section sets out the principles underlying information that is to be presented in the notes of the financial statements and how to present it. So notes contain information in addition to that presented in the statement of financial position. So the whole idea about the notes to the financial statements is to explain and elaborate on the actual financial statements and some of the things we may have not included in the financial statements for a number of reasons. So for example, we talked about the recognition, the recognition criteria and the definition criteria. Can you remember that? Can you remember the definition criteria and the recognition criteria? Yes, I hope you do. So if a document, if a particular item meets the recognition and definition criteria, we put it in the statement. If it doesn't, then those are some of the quirky things that we put under the notes to the financial statements to explain further things that are related to the financial statements. So statements, it says here, notes contain information in addition to that presented in the statement of financial position, the statement of comprehensive income and income statement and so forth. Okay. Notes provide a narrative description or disaggregation of items presented to those statements and information items that do not qualify for recognition. I think I spoke to you earlier about that. Okay. In addition to the statements of this section, requirements of this section, nearly every other section in this standard requires disclosures that are normally presented in the notes. So let's look at an example of what they said here. So it says here, basic accounting. The financial report is a general purpose financial report prepared in accordance with the requirements of authorized deposit-taking institutions under the Banking Act of Australia, Australian Accounting Standards, Corporations Act of 2001. So it actually sets the stage about what the jurisdiction or scope is. Now, if we look at it from a SME perspective, it won't be as stringent. So SMEs would, in my view, have not a general purpose financial report, but a special purpose financial report. How many of you understand the difference between a special purpose financial report and a general purpose financial report? Anyone? Oops, what happened there? Did I lose something? What do you think? Can you tell me the difference between a special purpose and a general purpose financial report? Come on, I'm waiting.
Yes, students, you can take clue from public accountability of the companies when they will go for a special purpose and general purpose.
Come on, I'm waiting for an answer.
Sir, for a limited group of people or for a limited users, the special purpose would be?
Not necessarily. Try again. What do you think?
So for legal,
Yeah, go ahead. Go ahead. I'm listening. Yes.
for legal entities, sir. I mean, legislative or legal entities. So
What do you
they
mean by
satisfy.
legal entities? So are you saying that legal entities should not prepare an annual report? A full annual report or not?
So for the tax authority.
Sorry? Can you repeat that?
For the tax authority, income tax authorities.
No. So what is the key thing that differentiates people from, or companies or institutions or entities, business entities, from doing a full annual report or full general purpose financial report, which this example is, and on the other hand, the special purpose financial reports?
The general purpose for shareholders, the special
Yes.
purpose,
Special purpose for?
banks like that.
Not necessarily banks. No, that's not entirely correct. Okay. Can you see this one?
Institution want to know about something.
Can you see this? Can you see this particular sharing screen where they talk about listed one and list 1 and list 2 tier? Can you see this, please? Do you see a red color website that says DDO?
Yes, sir.
Okay, good. So let me just show you this one. So when you're talking about full general purpose financial reports and reduced disclosures, or what you call special purpose financial reports, any listed entity, any publicly listed entity must do a full annual report. Whereas there are fully what you call disclosing entities, registered management investment schemes, regulated companies, cooperative issuing debentures, Australian governments, state and territory governments, local governments, all these things, because they have a public accountability, they have to produce a full set of reports. Whereas others, if you look at this tier 2, certain unlisted public companies, private companies, clubs, charities, independent schools, and things like this, they don't necessarily have to provide a full set of financial reports. And there's a reason for that, because they don't have a significant public accountability as opposed to some of the other areas. And therefore, that is where we talk about this concept of special purpose financial reports. Okay. Now, in your perspective, SMEs, what kind of reports should they prepare?
Specific financial reporting, sir.
Special purpose financial reports, why?
Because mostly they are not the public limited companies, they are private.
Yes.
And so they does not need to disclose everything to the public, so they can go for the specific financial reporting.
Correct. So basically there is an exception. There are some situations where private companies, if they are very large, then there are instances where you may have to produce a full set. But in most cases, you're right. If it's a private company, they don't have to provide a full list of disclosures under the GPF, General Purpose Financial Report, GPFS, whereas you do what you call reduced disclosure or special purpose financial reports. Okay, is that clear? Any questions there? All good? Okay. Now let's move on. Notes, the structure of the notes are as follows. So you will have the presentation about the basis of preparation. So let me just quickly take you through to the basis of preparation. Now the structure in most cases is the same. So they talk about the basis of preparation, and that's what they're talking about here. They talk about the specific accounting policies used. So they say here very clearly, it is using Australian accounting standards in this context. It talks about under which acts it has to report under. So it's setting the stage of, excuse me, of the scenario of the notes to the financial statements and the financial statements itself. An entity shall, as far as practicable, present the notes in a systematic manner. The entity shall cross-reference each item of the financial statements to any relevant information in the notes. Okay. So here they talk about historical conversions, anything that happened there. And recently there was a change in the lease in AASB 16, which deals with leases. So that came into effect on the 1st of October 2019, and that created a fair bit of challenges for some of these institutions. So what's happened is they have changed and adapted the changes to AASB 16, and they have disclosed significantly on how they have adapted this situation. So what was the effect of it? Okay. Next, we have AASB interpretation 33, uncertainty over income tax treatment. So they have specifically identified different things that are relevant to the financial statements, foreign currency translations, business combinations, comparative revisions. They talked about critical information assumptions and estimates. They talk about future developments of accounting standards. So they have actually gone through every situation. Then they talk about, now this part here is all about the basis of preparation of the financial statements, okay? So then they also provide some additional information on segment reporting. So financial reporting based on accounting policies, reportable operating segments. So you can see that extensive notes to the financial statements have been provided in this report. Now, in some cases for SMEs, they don't have to go into that much of detail, but still some relevant detail is required for SMEs as well. So let's go through this again a little bit more. So the entity shall, as far as practical, present the notes in a systematic manner, and you can see how systematically they have presented this, okay? The entity normally presents the notes in the following order. The statements that the financial statements have been prepared in compliance with IFRS and so forth. So you can see that that has already been given here. So let's see if we can map it onto this, okay? And so here they've done that. A summary of significant accounting policies applied. You can see the policies all over here. They have shown everything, all the different policies that they are applying. Then they talk about supporting information for items presented in the financial statements, in the consequence in which each statement and each line item is presented and so forth. So you can see here that there are different aspects, different things that they have highlighted. For example, applying the group accounting policies in use of judgment. So that belongs to the previous section about applying policies. So this is all about the policy stuff. Now we're talking about financial performance, specifically in relation to the financial performance. They talk about the accounting policy. So operating segments are presented on the basis of consistent with information provided internally to SPARC's key decision makers and reflects the management of the business. Cash earnings is reviewed. So it talks about the actual policy of that particular area. Now, do you think that the statements for an SME would be as detailed? What do you think? Yes, no, maybe. What do you think? Anyone? Why is everyone quiet? I hope you're not sleeping. Anyone?
Professor, I guess it might be detailed because they go for the specific purpose. So they might be very detailed about that.
Well, your answer is somewhat correct because, yes, if they go for special purpose financial reports, if they have a complex business structure, they will have detailed financial reports. But in most cases, special purpose financial reports don't have a necessary structure. They have to follow certain aspects of the IFRS, but not necessarily all of it. And therefore, there may be situations that the notes to financial statements may not be as detailed in relation to special purpose financial reports, but it again depends on the company, depends on the size of the company, depends on the complexity of the SME and so forth. So your answer is partially correct. So it's yes and no. Okay. Right. The summary of significant accounting policies applied. So they talk about accounting policy here. And they talk about all the aspects they want to talk about here. They talk about reconciliations and so forth. And then they talk about net income statement. They talk about the policy that's applied. They talk about the accounting policies on non-interest income. So you can see that under each section, they have gone into great detail about So impairment of changes, note number 6, they talk about the policy and the relevance of each of those things. So you can see under each section, they first highlight what is the accounting policy used. Then they talk about the significance with details of how it is relevant to the organization. Right. Disclosure of accounting policies, you looked at that. Information about judgment. The entity shall disclose in the summary of significant accounting policies and other judgments apart from those involved in estimations. That statement has made it in the process of applying the entity's accounting policy. So for example, if you look here, it talks about that critical accounting assumptions. So the policy and the assumptions are discussed right under in the policy statement in itself. Is that clear? Do you have any questions up to this point? It's very interesting, isn't it, to see the actual standard, the standard over here, being applied in a real life example. What do you think? Is that useful? Is that beneficial to you to see how it really operates?
Yes, Professor. It is very easy to understand, and you can also compare how the practical application will be.
Exactly. I'm a practitioner, so obviously I like to, combine it with real substance. I don't like to talk about something when it's not translate in real life, right? So very good. I'm happy with that feedback. Thank you. So let's continue. The information about key resources of estimations and uncertainty. So entity shall disclose the notes information about the key assumptions concerning the future and the key resource estimates. So that's what they do over here in terms of estimates, assumptions, and estimates. So both of these things are covered under the notes. You can see under each section, the accounting policy and any assumptions are also listed down. Let's look at another one. Here, they talk about the accounting policy. They talk about any assumptions, any estimates, all those things are discounted further down. Okay, so you can see very clearly how beautifully they have structured it and how very importantly they differentiate all these different aspects of it. Okay, right. So we talked about consolidated financial statements and separate financial statements. Okay, this section defines the circumstances which an entity is applying this standard, presents a consolidated financial statement. It also includes guidance on separate financial statements. Now, if you're a large organization with different entities, then the parent company would provide a consolidated financial statement. What do I mean by a consolidated financial statement? Can somebody tell me what you mean by a consolidated financial statement? Anyone?
Financial position of all the daughter companies would have been consolidated in a single financial report, sir.
Correct. So thank you for that. So what it means is that you would combine all the financial performances of that entity as a whole, remove, there are a number of things they do. They remove intra-company transactions. So they look at it as a whole. So there are a number of steps in doing consolidated, financial statements. Let me just find that for you. Let me give you these 7 steps. This is usually we talk about 7 steps, but in this case there are a little bit more. Let's have a quick look, okay? So there are a couple of steps that we follow when we are doing a consolidated financial report. Now, remember, you don't have to do this by yourself because now when I was in industry, software tools did this for us, but it's always good to know the different steps in consolidating processes. So you record intercompany loans, you charge corporate overheads, you charge payables, charge payroll expenses, complete adjustment entries, investigate assets, liabilities, and equity accounting balances, review subsidiary financial statements, eliminate intercompany transactions within the entities internally, review parent financial statements, record the income tax liability, close subsidiary books and move it up to the parent, close parent company books, and issue the financial statement. So it's very straightforward, right? You can see that you eliminate all these other things. But when you are looking at an SME, do you think you will have a situation where in the majority of cases there would be a consolidated financial statement or not? What do you think?
Professor, can you repeat your question?
My question is, for an SME, do you think they need to do a consolidated financial statement or a normal financial statement for an SME?
It is a small and medium scale, so the company size is small.
Yes.
So they can go for the separate financial reporting.
Exactly. They don't need to go down the path of consolidated unless it's a very large SME. There are a couple of very large SMEs globally that have multi-tiered companies or subsidiaries which are fully owned by the parent, and then they are private companies. Okay. So in such situations, yes, you might have to do that. But in majority of the cases, in 99% of the cases, it's highly unlikely that an SME would need to produce a consolidated financial statement. They would just provide a standard financial statements in such situations. Okay, let me just do that. Popped up. Okay. Right. Do you have any questions up to this point in time? Anything at all? Okay, let's move on. Let me also get the consolidated financial statements up here as well. So this is a consolidated financial statement. Financial statements, there it says. So it gives you the financial performance, talks about the financial performance is also another name for income statement, financial assets, financial liability, that is the statement or balance sheet. Okay, capitals and dividends is the statement of change in equity. And let's see how these guys have performed overall. Okay, so if you look at it here, let's go back into the theory again, okay? So requirements to present consolidated financial statements, except as permitted or required by paragraph 9.3, which is here, and 9.3c, which is on the next page, okay? We'll look at that shortly. Parent entity shall present a consolidated financial statement which it consolidates its investments in subsidiaries, okay? So parent need not present consolidated financial statements if both of the following conditions are met. The parent in itself is a subsidiary, and if ultimate parent produces consolidated general purpose financial statements. So this is for a multi-tiered situation, okay? Also, in situations where subject to paragraph 9.3b, which is this one here, we'll read through it later, a subsidiary is not consolidated if it is acquired and is held with intention of selling or disposing of it. So in such situations, you don't do it. Then 9.3, if a subsidiary previously excluded from the consolidation in accordance with paragraph 9.3a. So in certain situations, you can remove the consolidations, but that is very rare in how you achieve. But in my advice, in SMEs, for the purposes of this course, it is highly unlikely that you will have to or need to go through a consolidated financial statements, okay? However, you will need to know about it, all right? So we talked about the consolidated financial statements. It is producing one set of financial statements for the entirety of the group of companies and anything that the parent company holds. Okay, so let's look at that. Let's look at the next section, which is more relevant. Special purpose entities. An entity may be created to accomplish a narrow objective. For example, to effect a lease or undertake research, development activities, securities, financial assets, etc. Such as special purpose entity may take the form of a corporation, trust, partnership, or unincorporated entity. Now, don't misunderstand or confuse yourself with special purpose entity and special purpose financial reporting. They are two different things, okay? Special purpose financial reporting is situations where a non-listed company reports. Special purpose entity is entity that is created for a specific purpose that the organization wants to go through. For example, Microsoft has created a separate fund, the Bill Gates Fund, or he has purposely created it as a special purpose entity to provide funding for research. So that is a special purpose entity. So there are different situations, okay? Now we talked about the consolidation procedure. Again, I'll very quickly go through this. Combine the financial statements of the parents and its subsidiaries line by adding together list items of assets, liabilities, equities, and expenses. Eliminate the carrying amount of parents' investments in each subsidiary, because we are looking at the net effect. So if you have invested in the company in the subsidiary, you'll be double counting them. When you add them together, you'll be double counting them unless you take the investments on the subsidiary out. Because do you understand that, or do you want me to explain that a bit more? Is that clear as to what I just said?
Yes, Professor, it's clear.
It is clear?
Yes, Professor.
Okay, good. So we have to eliminate the carrying amounts, then measure and present non-controlling interest in the profit and loss of consolidated subsidiaries for the reporting period, separate from the interest of the owners of the parents. Measure and present non-controlling interest in the net assets of consolidated subsidiaries, separated from the parent stakeholders' equity in them. Non-controlling interest in the net assets of the amount of non-controlling interest on the date of the original combination calculated, and the non-controlling interest shares of changes in equity since the date of the combination. Now, there's no way we are going to cover all this in 1 hour, because corporate finance or corporate accounting or consolidation is an entire course in itself, okay? But what I'm doing is I'm just giving you a very brief, very quick taste of what consolidation is in this context. But I want to emphasize that this is not as relevant to SMEs as it would be for large corporates. Okay, I'll just make that very clear, right? So there is intra-group balances and transactions, then uniform reporting dates, uniform accounting policies across the entities. Now, all these things are relevant for large organizations, but not necessarily for SMEs. And I don't understand why this is still presented in IFRS for SMEs. They have to further refine this. In my view, I'm still a critique of the IFRS for SMEs framework. It is still too demanding, still too many notifications. If you ask me, they also need to consider cutting it back a little bit, in my view. Okay. Disclosures in consolidated financial statements. So obviously the disclosures have to be made in the parent or consolidated financial statements. Facts of the statement of the consolidated financial statements, the basis for concluding and control exists with the different entities and so forth. Separate financial statements can be produced if needed for each of the subsidiaries separately, if that's needed. Okay, so in here they do that. Okay, they do that. I'll show you. I saw somewhere about segment. See if I can find it. Segment reporting. Oh, here you go. If I think I saw it somewhere. Oh, here. So here they talk about segment reporting on note 2. Okay. If you go to note 2, let me have a quick look at note 2. That's note 1. Note 2, here you go, segment reporting. So here they talk about the different segments of the, see here, Westpac International Institutional Banking, Westpac New Zealand, specialist businesses, group businesses, total, consumer business, corporate business. So you can see here, they have, in this case, chosen to still produce statements based on its subsidiary. So each of these things is a subsidiary of Westpac, Westpac New Zealand, Westpac Institutional Banking, and all these things are different subsidiaries. Okay. Next, we look at accounting policy selection. When a parent, an investor in an associate or a venture, the entity, or it is being invested in another entity, and what are the specifics around that, preferably in the notes to that entity. Okay. So combined financial statements are a single set of financial statements or two or more entities under common control. So combined financial statements are, again, where you get all these different entities together and you present them as a single statement. Okay. Disclosures in combined financial statements, the fact that the financial statements are combined has to be clearly identified. The reason why combined financial statements are prepared, the basis of determining the entities are included in the combined financial statements have to be clear. So you need to tell why these subsidiaries are involved as consolidated or combined financial statements. Okay. So do you have any questions up to this point in time? Any questions? Anyone?
Sir, I'm not getting a clarity view about separate and the combined financial statements, sir.
Okay, sure. So combined financial statements is where you combine one or two or three entities and provide those financial statements as a group. Okay. So
Okay,
you
sir.
can, whereas a consolidated financial statement is where the parent company produces a financial statement, taking into account all the subsidiaries as one. Does that make sense?
Okay, sir. Okay.
All right.
Yes, yes, it's clear.
Good. So let me just want to do a small quick presentation of I'm just trying to find a small video.
Hi guys, it's Philip.
Okay, I'm going to quickly put a small video for you, okay? So I'm going to stop sharing what I am now, and I'm going to now share another video from my friend, Philip Wong, who is a bit of a celebrity on YouTube. If you look at some of his stuff online, it's absolutely fantastic. So I'm just going to share that with you. Share. Sorry, I think I made a bit of a mistake. Hold on.
Wong here. I got another question posted to my Facebook wall, and that was, what is the connection between positive accounting theory and agency? Now, I'm going to give you some background first. Now, every theory is based on a number of assumptions. Positive accounting theory, and that is capital P-A-T, was first developed by Jensen and Merkling in 1976. The link to their original papers is in the description below. Agency assumes that there is a relationship between two people where one person, the agent, is basically doing on the work for and on behalf of someone else, and that is the principal. In most accounting courses, we usually just think of these as being the shareholder and the managers. In fact, there are many types of agency relationships. You can see I've done a video on this previously. Have a look at the links below. Now, Ross Watts and Gerald Zimmerman built their ideas on these influential papers, and they wrote their papers about positive accounting theory in 1978 and 1986. Again, links are below. They were more interested in the accounting decisions that managers would make given the pressures and the various circumstances that they were placed under by the principals. In order to look at this relationship, they just merely borrowed theories of agency. Now, why go ahead and invent your own theories about the mechanics of human behavior when there are perfectly good ones that you can just already use? So we can see that one theory will just assume another theory and be based on top of that. In fact, agency theory assumes that all human behavior is economically rational. And this idea of rationality has a whole host of authors going from Friedman all the way back to Adam Smith and beyond. And it's really not a stretch of imagination to assume that most managers and most shareholders are going to be greedy. The thing is that the foundations of any system, well, if they're going to be a little bit wobbly, then all of the structure on top will also be a little bit unstable. There's plenty of research that questions whether humans really are as economically rational and as greedy as we assume them to be. I think some of the economic models that we use are just mere oversimplifications of the real world. They're caricatures, and they're useful for understanding the key elements, but sometimes they can be dangerously short of the details. We need to imagine the world complexly. We need to question the assumptions that go into all of these theories and models, and we need to be very critical of our own ideas. This complex thinking will not only improve your grades on the examination, but they'll make you a sharper business person, and they'll make you a better human being, and basically less of a jerk anyway. Thanks very much to Catherine Ong for posting this question on Facebook. If you have any other questions on accounting, you can always tweet me.
Okay, so why did I play that for you? You're studying IFRS, but IFRS is based on the understanding that there is something called agency theory. Okay. However, in some cases, agency theory does not necessarily apply to SMEs. Why is that? Which is funny, isn't it? Why doesn't it apply as much? What do you think? Come on, students. Why wouldn't agency theory apply as much to SMEs? Nobody wants to say anything. Come on.
Sir, in case of development of audit, sir.
Professor Chandra, you wanted to say something?
Yes, there is no agent.
Sorry, we can't hear you. I can't hear you. Your mic is not working.
No agent. Principal and the agent are one.
Sorry, Prof, can't hear you. Can somebody else speak? I'm not sure if there's something wrong at my end.
So we don't have any stakeholders.
Are you speaking? I can't hear you.
Like we can hear you, sir.
Hold on, let me try again. Bear with me. Okay, now try. Can you hear me?
Hello, Prof. Can you hear me?
Yes, I can hear you now. Go ahead. Yes.
Yes, Kirtika.
Go ahead. So why is agency theory not as relevant to SMEs?
Professor, I think the SMEs do not have the shareholders and they are the single person who is taking care of their business.
Single or a group of people. SMEs are not necessarily individual owners. They are not. They could be sole traders. They could be partnerships. They could be not-for-profit. There could be a lot of other things. But their relationship is with possibly with donors, and in most cases, they provide their own equity as bank loans. So in that situation, in the context, they do not necessarily have that shareholder, that agency theory relationship. Okay. Based on that, I will stop it for today. So next week, we will continue accounting policies, estimates, and errors. So that ends my presentation today. I'm just going to stop recording, and then we can have any questions. I've got 3 minutes more. If you have any questions, I can do a quick one, but we'll stop in about 2 to 3 minutes. Okay. Any other questions?
Professor, I have a general question.
Yes, please.
Like we have a parent company and we have like 4 or 5 daughter companies to that parent company.
Yes.
And if the daughter companies are paying their income tax alone, like separately if they are paying, can they have a consolidated financial statement?
So in such situations, if the child company is paying, then you will get a tax credit of the amount you paid in the subsidiary in terms of the parent. So the parent does not have to pay for the percentage of tax already paid by the child company or the subsidiary. But that's a specific tax related issue. So it depends on country to country as well. But generally, that's the theory behind it.
Yesterday we were handling that topic, Prof.
Okay.
Tax, income tax.
Yes. Good. Okay, then I'll leave it at that. I'm actually at my workplace today after a few months of not coming. I come in here now about once or twice a week in most cases. So you can see one of the big buildings at the back, and this is my office. You can only see the back of it. So I can quickly show you around my office if you like to see that. So that this is my beautiful office. I think Professor Charumati and you have both visited mine before. So welcome to my office. So thank you so much. I will leave you to it, and I think you have your next class at 9 o'clock. So thank you so much. I'll see you next Wednesday at our usual time of 8:30. Thank you so much, and I'll talk to you soon.
Thank you, Professor.
Thanks. Bye.
Thank you, sir.
No worries. Bye-bye.
Students, you may join BM class.